In today's video, I am going to be breaking down Kevin O'Leary's top dividend stocks across all of the different ETFs that he owns and that he runs. Let's get down, let's check these out. So this first stock is Exxon Mobil. XOM is the ticker symbol, and it currently has a massive 5.66% dividend, which is absolutely fantastic at the time of making this video. Its average share volume is 25 million, so it's easy to get in and out of. And it has a massive $250 billion market cap. Now, even before this coronavirus pandemic, it was trending downwards. Recently, it did hit what seems to be a very good double bottom and has rebounded slightly. However, now it looks like it's starting to trade sideways once again. Now, at the time of editing this video, it's just over $62, so of course it has gone up since then, which is nice to see as well. And it pays a quarterly dividend that has been increasing quite often, as we can see before coronavirus, but since the coronavirus, not many companies have been allowed to raise their dividends, so that's why we haven't been seeing that. Now, it has been hitting and missing its last 4 quarters. The furthest out first quarter, it missed. However, the 3 periods after, they did beat, which is nice. Not massive beats, but they did beat. Next is Verizon. Again, massive dividend, 4.39%, and its ticker symbol is VZ or VZ if you're American. Its average volume is 17 million shares, so easy to get in and out of, and that's going to be something that you will see across all of the different stocks that Kevin O'Leary has. From there, they have recently gone up in value, which is nice to see back in 2019, but since then they have been trading sideways. They did recently up their dividend as well, which then does tell us that they are confident in future earnings. And of course, they've beaten all 4 of the last 4 quarters when it comes to earnings estimates. AT&T is the next company, and this one has a ridiculous dividend. I'm not too sure how safe it could be, but it seems to be pretty safe at this point at 7.11%. The ticker symbol for AT&T is just one letter. It is T, as in Tom. And of course, the average volume is 47 million shares traded every single day. So this is a very, very liquid stock. Now, when it comes to analysts, I don't necessarily point this out because analysts could be persuaded by the company that they are working for. However, versus the analysts' price expectations, currently trading at around $29 at the time of making this video, and the average estimate is about $30, so it's about $1 off from where analysts think it's going to go. But it has been on the steady decline until a couple of years ago. It started to increase, then it stabilized before coronavirus. It's stabilized since. Will that growth that we've seen here continue? That's going to be really hard to say. Everyone is moving to more of an online work, more online altogether. So AT&T could benefit from that, but at the same time, with this previous history of the stock going down, I personally stay away from companies unless there's a massive growth story that's about to happen. I really do stay away from that. And I don't see any massive growth story, because if there was, we would start seeing the price, of course, increase. Now, they did just recently up their dividend to 52 cents last year before the coronavirus pandemic. However, at the same time, these are not massive increases. Out of the last 4 quarters, they've either meet or beat their expectations, and 2020 wasn't exactly a massive down year when it comes to revenue. It was, however, for earnings, which to me shows that there is a few issues that are in the pipeline, because if you can make the same amount of money as you did in 2018 and then have a negative earnings, it doesn't look too good on your company. MERK, MERK on the stock market, is also another company that Kevin O'Leary holds. This is another one that's very interesting, 3.57% dividend, and of course the average volume is 13 million shares traded every single day. Now, with MERK, they have gone up, and of course they are now stabilizing, and of course this is starting to look like it could break out very soon. And of course they have, at the time of recording this video, it was at $72 per share. Now at the time of editing this video, it's just over $77 per share. So this did actually break out. Now, the stock price has increased, but also the dividends are increasing each year, which is really nice to see. And of course, the earnings are pretty well everywhere. They beat 2 quarters, they missed 2 quarters. Anyways, I hope that you have enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.